This is my weekly market recap of every trade went through, every trade I took, every trade I should have took, and even the trade I didn't take. I am gonna, put it down, and I'm gonna go the emotions part of it. Why did I enter the trade? Why did I not enter the trade? This video should be really viable. This week, personally, to me, was a really wonderful week. I found out how to do my other drawn liquidity, which was the trend line liquidity, and I found out how to do the equal high or equal low drawn liquidity, right? So before we get into the video, make sure y'all sub and like, and yeah, let's get to it. Right, so on Monday, no trades took in, market ripped up without an hourly confluence. Like, alright, I'm not gonna take no trades. Tuesday, no trades here as well. Market never gave my 15-minute confluence, and the 30-minute drawn liquidity was bearish, so I was like, okay, can't take it. And Wednesday, we took a wonderful sell trade to the downside. 4 hour drawn liquidity, it was bearish. You can see it over here. 4 hour bias was as well bearish. So this was considered a high quality setup, and he delivered as a high quality setup as well. Prior to that, we had an hourly confluence, which was the hourly fair value gap, another hourly fair value gap, and order block, which was a high probably order block, right? With that, what we had go to the lower time frame. We were looking for execution. 15-minute what I look at, because the hourly time frame broke the share up, right? Hourly time frame was against the drawn liquidity, so looking to play a little safer, which looking for a hourly order block. Why did I look for a 15-minute super liquidity and not a 15-minute order block? Very simple. 30-minute random market went here. The 15-minute drawn liquidity was bullish. The 30-minute drawn liquidity was bullish, so I was looking for a super liquidity, which was this intentionally, and this right here changed the 30-minute drawn liquidity and a 15-minute drawn liquidity back to the bearish side. Then I was looking for a 1-minute 5-minute execution, which I had right over here. As you can see right over here, I had a 5-minute execution, which was this 5-minute order block. After the sweep, I have to look for a independent 5-minute confluence, which is this order block right over here. Prior to that, we had a 1-minute entry position, right over here. So that's the 5-minute, 1-minute old fair value gap. Once the fair value gap, looking for a bearish reaction, so stop right above that, like 10. Instead of putting 15, I'm gonna change to 10 because 15 is way too much, So like around somewhere there is good, right? Putting it there, putting it 10 pips above. So what I learned for this week was, the reason I put my sell stop a little bit higher above the buy side liquidity or sell liquidity is just because of the spread. Once the market goes up there, Saturday will do that, and the spread will usually take us out, and the market will not sweep by high or low, but just a spread. If you put it we put it way right on the sweep of liquidity, market will tend to, even if we take us out, market will just go there, spread will take us out, right? So we're gonna be careful about that. So that's how I take it above, right? Prior to that, TP1 right here, TP2 is right over there, and round, I had a break-even spot right over here with the hourly fair value gap, which was right over here. So I just broke even right over here. Right when it does this, I broke even. Prior to that, I was looking for a 5-minute confluence to start, trying my stop loss, which I never had. Which right when I had it, it hit both of my TP. Why is my TP over here? Very simple. 4 hour salsa liquidity right over here. This was a 4 hour salsa liquidity. With this, there was literally nothing else with it. There's no trend line, there's nothing. So we can go deeper. So this right here was the safest thing to go to, and it was safe. Market eventually went up here. For Tuesday London session, New York session, no trades. This one I made a 3.5 RR, right, which is a really good RR. I made this trade, which is very nice, Other than that, this right here, this week I ended up in a win. Now I ended up in a huge profit, which was I think like 5%. With this right here, I had a no trades here, market set that liquidity, and if I enter that trade, it's gonna break my rule. Although my drawn liquidity was right, but it's gonna break my trading rule, so I wouldn't be doing that, right? With that, on Tuesday London session, as I said, broke my another rule. Although, okay, I can't take this because this right here, they're equal. It's not equal market set as liquidity, but we right here set that liquidity. I was like, okay, I can't even take the trade because market drawn liquidity might change back to the bullish side, in which it did in the next session. Trading session, it did change to the bullish side. And what the market do, rip right back up, right? So I didn't take no trade on London session, neither New York session. As you can see over here, was this a, yeah, these were equal lows. Yeah, So that's what the market needed to go down here. But when the market went down there, I never had a confluence beforehand, so the market just went down, just took out liquidity, went up, you know what I'm saying? So I was looking for a, so on Wednesday New York session, I didn't take no trades. Next session, which was the Thursday London session, I had a setup, and I don't think I had a setup. No, I didn't have a setup. I was looking for a bear side because market was in a 4 fair value gap, so I was looking for sales. But when that happened, literally had no trades, right? So market just ripped up, and never gave us a setup. So, but I did have my setup eventually later on, and yeah, you can see it over here. Market dumped. That should be with my setup, but give me a late setup, just August is gonna be like this. So other than that, I was looking for New York session. I was looking for a long position. Why was I looking for a long position? Market dumped, took out so much liquidity, took out a whole trend line, and as we know, this trend line did not have no order blocks that could save it. So there was right here the order block I used, over here the order block I used, over here the order block I used. So there was literally no order block that were left and only liquidity. So the market just dumped to the liquidity line, filled the fair value gap a bit more. All of the fair value gap already got filled one, but that's not a defill, right? So market filled the fair value gap more, respect the fair value gap, touched the hourly order block. And on this, I was looking for a 15-minute conflict because the hourly time frame broke structure down. And if I would have entered here, I would break my trading rule. So looking for a 15-minute conflict, which is the order block, fair value gap over here. And 15-minute fair value gap, I was looking for a 5-minute confluence with it. Independent 5-minute conflict, which is for 5 minutes super liquidity and 5-minute order block. With that, I was looking for one more thing. I was looking for an execution, which I had over here, which was a fair value gap. Which a fair value gap got inverse in a 1-minute building block. Inside of that, sets up below the 5-minute thing, and a couple ticks below it. So when the market does go back down, like you see right here, it went down. Sometimes if it gets like a little closer right here, market might take out just because of the spread, which happened on Friday. But yeah, I learned that on Friday to put like set up 10 ticks below the buy side or sell liquidity. With that, try stop loss. Was a really good trade. Why did we go for this as a TP? We're all the way over here, this hourly order block that is a TP. Why did I go for this hourly order block as a TP? As you can see the trend line, right? The trend line got created. So when the trend line got created, what did this trend line have? This trend line had an hourly order block that did not get touched, right? So this trend line, this right here could have not been a drawn liquidity just because of there was a trend line right here. This trend line could have not been a drawn liquidity because the trend line had an order block, right? So market will definitely go over here and accumulate and eventually go, go back down, then eventually go back up, right? So over here, I just say one more time, my take profit was based out of this hourly order block because this hourly order block, this trend line could have not been a drawn liquidity. All of the 4-hour drawn liquidity was bullish. The 4 drawn liquidity was bullish, but this right here could have not been a drawn liquidity because there was an hourly order block, right? So after that, 2 RR win, 2.2 RR. With that, the next day, which was Friday's London session, I did not take any trade on the London session because market, I was looking for sales because you can see we're in an hourly 4-hour fair value gap. And prior to the 4-hour fair value gap, literally no execution entry. Market just ripped out. I was looking for a 15-minute confluence because I was looking for a 15-minute confluence or hourly? No, I was looking for a 5-minute confluence at first, right over here. When I was looking for a 5-minute confluence, market just a 15-minute fair value gap, opposed to fair value gap, bro. If we would have entered a 5-minute confluence, we would have lost because, as I said, we gotta follow our rules, and that right there avoided us from taking a stupid loss. And eventually market ripped up and eventually gave us a sell setup right on market open. So next session on Friday, the Friday London session, New York session, I had a sell setup, right? So the sell setup, probably saying, yo, that's a really ass reward ratio because the market told me to get out at that time, so I had to get out. I had no choice, right? But I could have definitely held it to the relative equal lows right over here, relatively close already. I could have held it here or I could have held it over here, right? Well, saying the 15-minute rule told me to get out, but why did I take this trade? You can see on the 4-hour time frame, the drawn liquidity was bullish because this right here was activated, right? This became drawn liquidity. This right here became invalidated. The 4-hour drawn liquidity was still bullish, but guess what happened in 4-hour drawn liquidity? What happened in the 1 hour, right? There was a trend line, right? The trend line that the 4-hour drawn liquidity could have not been bullish. Why could have not been bullish? This is why I learned this week. This is why I learned so much value this week. I learned how to use relative equal highs and lows. as a drawn liquidity. At least I learned how to use trend line as a drawn liquidity. So for why did this buy setup? I had a buy setup right here. I took 2 losses on that. I lost 1% loss on here because I went against drawn liquidity. What did the market do? Dump, right? Dump trade down here. Why would a drawn liquidity downside, right? So the reason was downside, you could see right here, the market, when the market created a basket liquidity, what the market do? Retrace to this, back to this order block, which, not to this order block, I'll probably say it myself. When the market, no, actually, no. When the market went up here, right? Created this basket liquidity. When it came back down, when the market touches basket liquidity again, created another basket liquidity, which did not sweep out no other basket liquidity, right? This right over here, when it went down, what did it create? A fair value gap with what, a order block. And primarily I care about the order block because order block decides if it's gonna be a drawn liquidity or not. If there is not an order block, market will attempt to go that spot, you know, faster, right? Will attempt to break it, right? But if there's an order block, that would not be the drawn liquidity. So that's why although the 4-hour drawn liquidity was bullish, right? The 4-hour drawn liquidity was bullish, but this trend line literally said the drawn liquidity is not bullish. The drawn liquidity is bearish because in this trend line there was an order block, right? Literally saved it, right? And I had a sell setup right over here. With that, to the downside, we had a huge trend line, right? Prior to the trend line, what do we have? 1, 2 relative lows, 3 and 4, right? With this, what else do we have on this, right? We had every order block I used. This order block I used. This Cardano Tesla liquidity, this order block I used. Cardano Tesla liquidity, this order block I used right over here. Cardano Tesla liquidity, this order block I used. Cardano Tesla liquidity, this order block I used. Eventually used all the order blocks, right? Now there's no order blocks over here. There's no order blocks over here that's protecting it, right? So that means the drawn liquidity is definitely bearish. So the way that the way the trend line drawn liquidity it works for me, basically, I can only use the trend line drawn liquidity in the hourly time frame. You know, if there's a trend line liquidity, so let's just say the 4-hour bias is bearish, right? But there's a trend line liquidity to the upside. You know, going to the upside, right? Like this right here, go to the upside. Going to the upside, right? And my bias is lined with the in the trend line liquidity. If the trend line liquidity has an order block, right, I'm gonna aim for the order block, the order block that has not gonna touch yet, right? I'll go for that, right? I'll aim for that because that could not be the real drawn liquidity because market will definitely touch that, eventually accumulate or move up forward or eventually go back down, right? But we want to cash out profit, right? Profit is small profit better than big losses, right? Other than that, is the way I use my trend line as a drawn liquidity is when there is no order blocks that are left. Over here, order block I used, order block I used, right? There was literally no order blocks that I used because we know order block is used only once, right? And right over here, there's a downside trend line liquidity that was going to the downside. Guess what happened? It was an order block that got touched during the market, and so we know we got a setup right over there to the sell side. TP, I had to get out right here, but I could have held it down definitely over here, but you know, I try to break my rules. But it's kind of confusing telling this, like the 4-hour bias is bullish, but how the 4-hour like it became bearish. It's simply because this order block got touched before market open, and this one got touched during market open, and it got respected as well. And there were relative equal highs over here as well. But guess what? With the relative equal highs, the trend line literally protected it, which is making the drawn liquidity off to the downside. It's kind of confusing, but when I was looking for an entry, this order block got touched before market open. So from this order block, so from this trend line liquidity, right, when this order block got touched, what's the next? I'll be a drawn liquidity. This order block, because there's another trend line, right? This order block got used. Now what's the next? I'll be a trend line liquidity to the downside. And this, guess what? There was literally nothing here holding off there was no order block holding off the trend line. So that should be the perfect example for relative equal highs and lows. The 4-hour drawn liquidity has to be with me. So if in order for me to go for the 4-hour relative highs and lows, the 4-hour drawn liquidity has to be with the relative high equal lows. So I mean, if I'm bearish, right, and there's a relative equal lows that is bearish like this. So if I'm bearish right over here, there's relative equal lows that is bearish. I could go for this as a TP right over here, right? If I'm bullish, and the relative equal lows or bearish to the downside, I cannot go with that. I have to go with the forward on liquidity. But if there's a trend line, it's such and such, well, bearish, right? But if there's not, I have to go for the forward bias. And yeah, this is really confusing, but you know, I'll get in a plan. I'll get in a plan. But I made 2 mistakes here. I made mistakes on a Friday where I took 2 trades in one session, which was a bad thing. But I learned from it. I learned something really valuable from this as well. So, hey, I count that as a good exchange. I learned how to do trendline liquidity, trendline to drawn liquidity. I learned how to do the relative equal highs and lows as trendline liquidity. And one thing I learned that is don't take more than 1 trade because bigger loss are gonna occur. With that, we had a sell side liquidity here. We had a entry right over here. Only fair value went out of the order block, that right there. Then I don't look to the downside, and I was looking for fortune liquidity was bearish, 4 bias is bearish, fortune liquidity was bearish, 4 bias is bullish, 1 bias is bullish, 1 liquidity was bearish, 1 bias is bearish, right? So I was basically looking for 15-minute confluence, which what I had was the order block. With the order block, what we had was a 5-minute, another 5-minute order block sets up right above that, and entry right over here. So setup was too wide, and that's gonna be like that, right? So entry right over there, I had a 1-minute confluence with a 1-minute reconstruction. Boom, entry there. TP1 here, TP2 over here, TP. All of them got crushed, but market told me to get out, so I couldn't do nothing. Market broke it down, tried over here. This one I did not take, but as I said, even the trades I did not take, I'll put it down. But the bullish side of the market, when I took this buy position over here, the emotions were in check, everything was in check. It's just that, you know, I kinda, you know, pathology was in check. It's just that I expect to lose the trade, right? When I got into it, I was supposed to lose the trade, so all the pathology was in check. It's just that I broke my trading rule, which next week I should definitely be crushing it. Next week I'm gonna focus intensely, not breaking my trading rule, follow every rule, follow the take profit rule. And yeah, this is my weekly market recap. Next week, mainly primarily focus is gonna be find the right zone liquidity, use the trend line zone liquidity if there's a trend line happening, and if there's no order block, I can use that trend line liquidity. If there's no order block to the trend line, I could go for that zone liquidity. But if there's an order block, just go for the, if there's an order block in a trend line, just go for the order block. And if the zone liquidity and 4 bias is bullish, but there's a trend line liquidity that's going to the, you know, saying downside, and the bull side market has an order block, just go, you know, saying touch the order block and you'll pop and go back down to the trend line liquidity, right? Really hard telling this, but yeah, thanks for watching.